Hi everyone, my name is Grace McCrea. I am a junior in the Applied Investment Management program at Marquette University. I cover domestic consumer discretionary sector, and today I will be pitching MarineMax, ticker HZO, with a current price of $44.74 and the target price of $75.12. So moving into the recommendation, I am recommending to purchase MarineMax shares at $44.74 with a price target of $75.12, which represents upside of 67.89%. So really their target at MarineMax is to show that variety that any customer can find a boat from their business. So as the world's largest recreational boat and yacht retailer, they have 79 locations throughout the country, selling 39 premium boat manufacturers, namely Sea Ray, Boston Whaler, and Yamaha. So I also wanted to highlight that throughout the COVID-19 pandemic and these supply chain issues that persist, operations have not been hindered, nor has demand. In fact, CEO William Brett McGill did state that their demand is currently stronger than the price increases of boats, which is really important. So the first driver we'll focus on is acquisitions. Since 1998, MarineMax has made 32 acquisitions in total, 4 of which happened in 2021 alone. These were Intrepid Powerboats, Texas Mastercraft, Niswa Marine, and Cruisers Yachts. So their main goal with these is to increase the variety of their products, which really increases that customer satisfaction. So right now they have boats that range in length from 11 to 125 feet and in price from $12,000 to $35 million. And then looking forward, it's really important to know that 81% of the market remains an acquisition opportunity for MarineMax. So 19% of the market, they have in existing sales, but this fragmentation really represents the opportunity in the market. So the second driver, industry-leading balance sheet, really highlights the contract liabilities and customer deposits of MarineMax. So this represents the backlog that the company has, which is like their deferred revenues, where they have received cash from a customer for a good or service that is not yet provided. So these were up 300% in 2021, which is a 50% increase from the past quarter. And then in terms of same-store sales growth, we saw 13% in the quarter 4 of 21 and 9% in quarter 1 of 22, which is really important because these are historically their slowest quarters. And then in terms of liquidity and leverage, their cash balance is really impressive, 43% increase in fiscal year 21 from the previous period, giving them a current ratio of 1.9 times. And this is just really, really impressive with their recent acquisitions that have happened, resulting in that debt-to-equity ratio of just 31%. So this final driver highlights the commitment to exceptional customer service that MarineMax has. This results in 85% of their customers being loyal, which is quite impressive, especially when they're increasing that strong demand number through website traffic, that lead generation, and then also through first-time buyers. So the CEO noted that even if a customer is in, let's say, Minnesota in the winter off-season months, they do want their boat immediately upon availability and completion. So then, with this boatyard platform that's highlighted on the right side of the slide, this was something that MarineMax acquired during the pandemic, and it really helped increase their online digital platform when boat shows were minimally available. So this increased their demand and sales online. So in order to complete the valuation, I first completed a DCF model that was discounted future cash flows back to the present with a WACC of 9.39%, and this took into account a beta of 1.68. And then I'm expecting the business and industry to grow at a long-term rate of about 1.5%. So I weighed this model at about 60%. That gave me a price target of $81.30. And then the other two methods that I incorporated are PE, as I wanted to really highlight MarineMax's low PE in relation to their peers, and then EV to EBITDA, which I wanted to really highlight their low debt and the way that they finance their company. So both of those methods were weighted equally at 20%, coming to an even 100% price target of 75.12 with a 67.89% upside. So then to go into the risks a little bit, the first one will be that MarineMax does rely on their manufacturers to deliver that ideal equipment, whether that's safe, quality, modern, whatever that means to them, equipment, so that they're able to sell that and see that success from their business. So one company that made up quite a bit of their revenue in 2021 was Brunswick. And then the second risk will be supply chain operations, specifically from those manufacturers that have operations outside of the U.S., one being Azimut Benetti Group in Italy. So MarineMax has a good relationship with them as a business partnership, and this just introduces the risk of international issues such as political, economic, or supply chain, like I said. And then finally, we mentioned intense competition as a risk. This is specifically present in the boating industry, just for mainly boat show and physical retail space, something that most people don't think of, and especially applies to those competitors in Florida, one of the biggest markets, which makes up 50% of MarineMax's revenue. So to wrap up, we'll talk a little bit about the management. So William H. McGill Jr. founded MarineMax in 1998 after 25 years of experience as the principal owner at Gulfwind USA. And after those 25 years, it actually merged with MarineMax, so that marks MarineMax's inception. William H. McGill was the chief executive officer until 2018, when his son, William Brett McGill, pictured on the right, took over as CEO and president. William Brett McGill, his son, has also been a part of the company since its inception in a variety of roles such as COO, Executive VP of Operations, and Regional President, so he certainly has ample experience. And then today, William H. McGill is still a member on the board of directors involved with the company.